Good morning, grade 8s. I hope you're all fine and well after the weekend and that you all have got a wonderful weekend. But let's start by just greeting each other in the chat box. Right, guys, you will see today's topic is about financial accounting. We're going to start to look more at the accounting side of EMS. That most of it you have already done in the past, but remember what I've told you last week. For those that was not maybe attending, I think it was on Friday, Friday or Thursday, I've said that you did not do well in the assessments of that previous week regarding the accounting part, and that is why we're going to retake the accounting and we're going to do it over and over and over. Doesn't matter if we sit the whole week just on, let's say, on the CRJ journal, it doesn't matter. But you guys, this is quite important because you need to understand it, you need to do it. It's counting a lot of marks, and then next year you're going to continue with it, and even if you're going to choose to go on with the subject accounting, then you're still going to make use of it. So people, it's not always so easy, but let's rather take it step by step, do it over and over, and then we make sure that you understand it. Just one more thing. So maybe there will be one or two people that will say, but I know how to do this. It doesn't matter. Okay, you will always make use of this. So you then just see it as a revision. But as I said, we're going to stick a while now on the accounting side so you can understand what to do. Right, so basically for today, we're going to start first at looking at some accounting concepts, and then we will start to move to the CRJ again. Right, then there's a picture. Now, again, we need to understand what is the difference between service enterprises and trading enterprises. So again, a service enterprise is when a service is rendered to the public. Okay, for instance, and look there at the pictures. You guys will see there is a clean paws shop that is like a animal shop. So they are selling some animal things. Then just next to it, there's a guy standing there with some jackets, or looks like jackets there. So that will be like a dry cleaner example. And then there on the left-hand side, bottom, there's a dentist. And then there's a mechanic. And then, okay, that is a doctor that you see there busy with a consultation. Okay, so all these are examples of service enterprises or service businesses. So this is, again, when that person is rendering a service to the public. So you can see here, when you go to the doctor, it's a consultation. Okay, when you go to the dentist, it's a consultation. The guy working on your car, that is like he is repairing the car. So there are no products or items involved. So it is just a service. Right, if we look at that picture, then you will see that will be an example there. Okay, there's quite a big heading saying clothing. So let's say it's a clothing store. But if you look a little bit more into it, then you will see there's a fruit shop, there's a bakery, there's a deli, and it looks like something to do with meat on the other side. So that is small shops, and they are selling products, items. So as soon as products or items are involved, then it will be an example of a trading enterprise or a trading business. Why you also need to know this is because when you're going to do the books of accounting of a business, then you're going to do books when it is a service business, and you're going to do the books when it is a trading business. And it is different. It's not the same thing. All right. So how you're going to do the books for a service business is going to change what you do for a trading business. So in grade 8, you are just concentrating basically on a service enterprise, but still you need to know what is the difference between a service enterprise and a trading enterprise. Okay, the next table that you see here, and this is actually a very important table, and this is a summary of all the different accounts, concepts that you get in accounting. Okay, and then you will see I've divided them into certain groups. So we will come back to this table again, but if we just quickly go through it now, then you will see there on the left-hand side, there is a column that is saying assets at the top. And then assets are basically, there are two parts of assets. Okay, you get your non-current assets, and if you go down, then you will see there's your current assets. Okay, so first of all, let's say to each other again, what is an asset? Okay, an asset is something, like I always say, it's something that you can see, you can touch it. Like where I'm sitting, I can see, I can touch the table. Okay, so the table is an asset. The same with the chair I'm sitting on, the laptop that's in front of me. I can see a printer, for instance. I can see a hi-fi system standing here. So it's everything, it's things that I can see and I can touch it. So that is an asset. But of course, you get different kinds of assets. Now, like for instance, you will see there, the first one is saying tangible or fixed assets. And that, the examples that you need to know there is land and buildings, vehicles, and equipment. So those three that are fixed assets. Okay, again, think of a vehicle. You can see it, you can touch it, is an asset. Then you also get with number B, financial assets. That is, the example there is the fixed deposit. Okay, at this stage, you don't really work with that one, but you're still going to work with number C when we get to the current assets. And current assets are like trading inventory, of which sometimes talk about trading stock, debtors, and then bank cash flow and petty cash. That is all examples of current assets. So again, if we first take the assets column, okay, in general, assets, things that you can see, that you can touch, it is having a value, okay, but you need to start to define between the different kinds of assets. So fixed assets, you need to know examples there are land and buildings, vehicles, equipment. Then you get something like a financial asset. There's one example, it's a fixed deposit. And then you need to know current assets, and the examples there are trading stock, debtors, bank, petty cash, etc. Right, if we move to the middle column, that is saying owner's equity. Now, owner's equity, and look what is standing in front of you. Owner's equity is your capital account, your drawings account, all your expense accounts, and all your income accounts. Very important to know this. So owner's equity is capital, drawings, all your expense accounts, all your income accounts. And then you will see they have put there a lot of examples under expenses and income. So let's start with income. The examples there are current income, rent income, and sales. And with expenses, there's a long list. It's like water, electricity, stationery, telephone, repairs, insurance, advertising, wages, salaries, etc. Right. So again, money that's coming into the business is going to be seen as an income. Okay. For instance, somebody else is paying rent to you. That is a rent income transaction. That is an income. But as soon as you start to pay things, like you pay the water and electricity bill, you pay the telephone bill, you're purchasing stationery, you pay for it, you want to advertise your business, so you're going to pay for advertisement, then as soon as you pay for something, then it will be seen as expenses. Right, then we get into liabilities. Okay, just overall, we are going to get an idea what is liabilities, but again, you don't really work with liabilities in grade 8, only from next year, but liabilities basically means you owe money to somebody. Okay, again, there are two groups. There are the non-current liabilities and the current liabilities. Okay, with the non-current liabilities, your examples is like your loans, for instance, or when you take a loan out with the bank. And with your current liabilities, then its examples is like creditors and bank overdraft. But as I said, don't worry too much about it. Aslam, just put off your video, please. Don't worry too much about the liabilities. At this stage, just know there is something like liabilities. Basically, what it means is you owe money to somebody else. There are two groups, the non-current liabilities and the current liabilities, and just one example with each one. So the important ones that you're going to work with this year will be assets and owner's equity. All right. I'm then going to say this. Remember this table, very important. Okay, I might just going to ask some questions again at the end of the lesson based on this table. Right, okay, sorry, I just want to go back quickly. So I did spoke overall about this table, okay, regarding the concepts, but what we're basically now going to do is we're going to take again these concepts, and then we're going to do a little bit more detail about each and every one. So we're going to start with the assets. They say assets are property or legal rights owned by an individual or business to which money value can be attached. In other words, anything which will be enable the firm to get cash or a benefit in the future is an asset. Right. So assets, as I say, where you're sitting, maybe in your room or wherever you're sitting, look around there. Okay, look around in the room. What do you see? What is going to be assets in your room? As I said, there's things that you can see, things that you can touch. It is having a value. If you look there at the bullet, it's owned by an individual or a business. There is a money value attached to it. And even if you can sell it again, and then you will get some cash value for that. Right, I'm just looking in the chat box. I see, for instance, what Natalie is saying, the asset that she's seeing is the TV, for instance, and that's absolutely correct. Right, getting to liabilities. Liabilities means the amount which the business owes to outsiders. Remember what I've said? Liabilities is when somebody owes somebody else money. That is accepting the proprietors, and this can be expressed as liabilities equals assets minus capital. And that formula you can actually remember. So how can you go and calculate the liabilities of a business? Is when you take the total value of the assets minus the capital in the business. Okay. And remember, again, I said there are two groups of liabilities. It is the non-current liabilities and the current liabilities. Like your non-current liabilities will be like your loans, and your current liabilities will be like creditors and bank overdraft. Right, next concept that we are going to look at is profit. So let's see what do they say about profit. And actually the main goal of each business is to make profit. They say profit is the surplus of revenues of a business over its costs. So the money that the business is making at the end of the day, that is going to be seen as the profit of the business. Profit is categorized into, you get gross profit and net profit. Now, what's the difference between that? Gross profit is the difference between sales revenue or the proceeds of goods sold and or services rendered over its direct cost. Okay, let me just go through to the next one and then I will take it again. The net profit is the profit made after allowing for all expenses. In case expenses are more than the revenue, it's a net loss. Okay, but we don't concentrate now on loss, we concentrate on a profit. Profit is the main goal of a business. You get basically two types of profits. You get a gross profit and a net profit. What is the difference between them? Gross profit is the profit that the business is making after all the sales has been done. Okay, so all the income basically is the gross profit. But after they have subtract the expenses, what is left over, that will be seen as the net profit. So you can actually say gross profit is before deductions and net profit is after deductions. Right, and so we get into loss now. Loss is an excess of expenses over its related revenues, which may arise from normal business activities. It decreases the owner's equity. So, okay, loss is decreases the owner's equity. So what will profit then do? Profit will increase the owner's equity. It also refers to money or money's worth lost, against which the enterprise receives no benefit, for example, cash or goods lost in theft. It also arises from events of non-recurring nature, for example, loss on sale of fixed assets. Okay, so overall, actually, we don't really want to talk about a loss in a business because that's very negative. It's not good for a business to make a loss. Okay, but just basically know what is the term loss all about. That is when your expenses is more than your income in a business at the end of the day, and it decreases the owner's equity. For example, you can also have loss of money when there was, let's say, a burglar in your shop and they have stolen some of the goods or the products or whatever they have stolen. And then that last bullet, for instance, is saying that you can also have a loss on sale of fixed assets. What they mean with that is, let's say you purchased quite a few years ago a small vehicle. Okay, remember that vehicle is losing value each year. And now you're going to sell that vehicle again. But of course, you're going to sell it maybe less than what the value is supposed to be. Then you're also going to make a loss on that vehicle. Okay. Just again see what Natalie is writing in the box. She is saying, ma'am, since there is net loss, is there a gross loss? Yeah, of course, there will be a net, and like with there's a gross and a net profit, the same, you get a net and a gross loss. But the thing is just, again, basically it's going to be the same. So the gross is actually you've made a loss already with before any deductions was made. And the net loss will be you're making a loss, but then you still have subtracted. Although there's actually not money, you still have subtracted the deductions as well. Right, expenses. An expense is the amount spent in order to produce and sell the goods and the services which produce the revenue. Expense is the cost of the use of things or services for the purchase of generating revenue. Expense is that part of the expenditure which has been consumed during the current accounting period. And examples of expenses are payment of salaries, wages, rent, etc. So expenses, okay, and I quickly want to go back to that table that we have in the beginning. Look there, can you see that long list of expenses is all the things that you paid in the business, like the water and electricity bill. You purchase stationery, but you need to pay for it. Telephone you need to pay. The repairs you need to pay. You need to pay for the fuel that you put in the vehicle, the insurance premium, etc. All right. So basically, expenses is all the payments that you made for a business out of the business bank account. So it is the amount that you spent. Okay. Income. Income is the profit earned during an accounting period. In other words, the difference between the revenue and expense is called income. Okay, and then again, they give you basically a little bit of a formula that you can remember how to calculate income. So if you take your revenue minus your expenses, then you will get your income at the end of the day. So income is all the money that's coming into the business, helping you to make a profit in the business. That they will see as income. Like for instance, current income. Current income is, for instance, if you're going to render a service to somebody, okay, that money that's coming into the business is seen as an income. Rent income. Let's say you're renting out another building to somebody else. That person needs to pay you on a monthly basis rent. So that is a rent income transaction. That is an example of and income. Transactions, right? They say it is a financial happening entered into by two or more willing parties. It affects a change in the asset, liability, or net worth account. It is recorded first in journal and then posted into the ledger. Examples of a transaction are sale of goods, purchase of goods, receipt from debtors, payment made to creditors, purchase or sale of fixed assets, payment of dividend, etc. So basically a transaction is something that is happening like an agreement between two people, between two parties, for instance. So let's say I decide to sell my cell phone to one of you guys, then it will be a transaction that is happening between us. Let's say I've got a business, okay, and I'm selling some of my products or items to the clients, then it is a transaction that is happening between us. Drawings, okay, very important to know this. It is the amount of money or the value of goods which the proprietor or partner takes for his domestic or personal use. Drawings reduces the investment or capital of the owners, and it appears only in the accounts of sole proprietorship firms and partnership firms. Okay, listen to what I'm saying. Listen to these words. When the owner is taking something for his own private use, I'm again going to say this, for his own private use, or sometimes they talk about for his personal use. What do we call that? Drawings. Very important, people. So when the owner is taking something from the business for his own private or personal use, we call it drawings. Like, give you an example. Let's say the owner is busy there in the business, but it's already very late in the afternoon. And suddenly he remembers, oh gosh, he needs to pay his child's school fees tomorrow morning, first thing. Okay? There's no time for him to go to the bank to get the money. So what is he doing? He is taking some money out of the business till, okay, to go and pay the school fees tomorrow morning. So that means he's taking money from the business, but for the school fees, that is his own personal use, because the school fees has nothing to do with the business. Then that transaction, or what we call that, is then drawings. Important there with that second bullet there, that is saying drawings reduces the investment or the capital of the owners. Sorry, so actually it is decreasing the owner's equity of the business. Okay, again, Natalie's on it this morning with all the things, right? She's asking, does he have to give it back? Yes, definitely, he has to give it back. So sometime, because that is a transaction, to take that money from the till for his own use, that is a transaction. That must be written into the books of the business, in a journal. It must be written in. So in that journal, somewhere they're going to see, oh, but this owner has taken money for himself. He needs to put that money back sometime. Okay, so definitely the owner needs to give that money back. With or without interest, okay, that is going to depend a little bit on all the different types of business that you can get. Normally, they don't do it with interest. They just put the amount that they've taken, they put it back. But I mean, it is possible that they can decide in the business, having an agreement where they say, right, if you have taken money and you need to put it back, it might be with interest. But normally, it is without interest, okay, because the owner is taking it and you just have to give it back again. Right, capital, it means the amount in terms of money or assets having money value, which the proprietor has invested in the business and can claim from it. It is a liability for the business towards the owner. It is so because of business entity concept. And again, there's a little formula how you can basically calculate capital. And that is if you take the total value of your assets minus the total value of your liabilities, then you will get how much capital there is in the business. So capital is basically the money, Okay, but it's not only money, it can be also assets that's having a value that they put into the business. Okay, and remember what I said, that capital drawings and of course all your income and expense accounts is falling under the owner's equity. And then just regarding that second last bullet, that is saying it is so because of business entity concept. Okay, I just want to talk a little bit about that business entity concept. What does that mean? Because that is actually a rule, like a law actually, that there is in every business, that business entity concept. Now, what that means is that the things of the business and the private things of the owner has nothing to do with each other. Okay? I'm going to give now to you guys an example. So the things of the business and the private things of the owner has nothing to do with each other. Right, here comes an example, and I think then it will be a little bit more clearer. Of course, the owner needs to pay an insurance premium on the business, okay? On the building and everything that's inside the business. But the owner also pay private insurance premium on his private things at home, like his house and like his vehicle, etc. What this business entity concept is saying, that the insurance of the business and the private insurance of the owner has nothing to do with each other. It must be separate. And that is what the business entity concept is. Something that you need, not so really this year, but it is something that you need to understand as well, especially from next year and in grade 10, what this business entity concept is. But just remember, the business things, owner things, must be separate from each other. Right, then I've put there the accounting cycle to you guys. This is basically how it's working, all the steps, how it's working in accounting. If we look there at the top of number 1, they say identify transactions. So nothing can happen in a business if there's not a transaction happening. Then we moved around clockwise. So number 2, record transactions. That means you take that transaction that was happening and you're going to write it into a source document. And remember, we did source documents already. Things like a receipt, an invoice, the check, etc. Then the third one, they post it to the general ledger. Okay, first you're going to do your journals and then you're going to do it in the general ledger, that is the T accounts. Then they say calculate unadjusted trial balance. So after the general ledger, you're going to set up a trial balance. Then if there's anything that needs to be changed, you're making the adjustments, and then you're going to set up a new trial balance if there was any adjustments there with number 6. Then you're going to set up your financial statements. Now, your financial statements is like an income statement and a balance sheet. And then just there at the end with number 8, they say my closing entries. Okay, so that is also something that you not worry about now. That's only from grade 10 on that you will worry about that one. But basically, okay, this is a more full accounting cycle. But basically, this starts with transactions. Then you're going to write it into source documents. Then you're going to do your journals, what you know by now as your CRJ and CPJ. Then you're going to do your general ledger. Then you're going to do your financial statements. And then those closing entries will happen at the end of the day. Right, I'm going to stick on that one before I'm getting to the next one. So overall, that is just accounting concepts that we have done today. Okay, so having your chat box open, be ready, fingers on to type. Here comes my first question, and let's see who is going to be first. And I want one word. What do we call it when the owner is taking something for his own personal use? So who's going to be first? One word. What do we call it? Oh, there it comes. Good, good, good. I like it. Right. Of course, it is drawings. Right. Give me one example of a liability. One example of a liability. Doesn't matter if it is a non-current or a current liability. Just one example of a liability. Right. Amugulang. Good there. It's a loan, for instance. Loans, creditors, bank overdraft, any of those ones. Right. Okay. I want 4 things here. Okay. Name for me the 4 things that is falling under owner's equity. Name the 4 things that is falling under owner's equity. Name the 4 things that is falling under owner's equity. Right, let's see what is Lesedi saying here. She was first. Capital, income, expenses, and drawings. Wonderful, great. Right. In a short description, what is capital? In a short description, what is capital? In a short description, what is capital? All right. I don't see somebody on this one. Okay. Capital is the money. Okay, here comes something from Asana. Let's see. Money invested by the owner into the business. Great description that you have given there. Good. Right. Now I'm going to try to catch you out because I don't know if you're going to know this. I'm looking for an example of a fixed asset. So be careful. It can't be just any asset. I want an example, one example of a fixed asset. Okay. Alma was saying land, and then, okay, of course, Lesedi was saying after that land and buildings. Okay, just, you're absolutely, both of you are correct. I just want to say something on that. Lesedi was actually right by saying land and buildings because that is the correct name of the account. So just be careful on that one. Alma, you're not wrong, you are right, but just stick please with the correct name of the account. And the name of the account is not just land, it's land and buildings. And of course, other examples will be like equipment and vehicles. Right. Give me an example of a current asset. Give me an example of a current asset. Correct, Lesedi. Good. I like it. Trading stock, and it will also be like bank and debtors and cash that Natalie is saying. Yes, cash that will fall under your bank account. Right. So you're absolutely all correct there. Right. Before I'm going to show you the last slide, I quickly want to say something about. Is there any questions about today's lesson? as I said, this is things that you have done in the past, people, but we need to start from scratch, okay? And we need to take it now day from day to day and make sure that you understand it. So as I said, today, most of these things you already know, but it's important that you understand the concepts before we're going to move now to the journals, for instance. Right, I'm just going to move to that slide then. Okay, I think you all have noticed in the newsletter, remember, of the assessment that you're going to do tomorrow. Tomorrow, the 28th, it is the assessment for EMS. Okay, so please, people, I mean, I think this is going to be your last or your second last assessment from this whole week, from the beginning of last week. So you already know how it's working. So you need to go onto it. You need to take the assessment. You need to complete it this afternoon or tomorrow then. And then we are going to mark it. Okay, not this afternoon. So you need to do it tomorrow. And then you need, the next day we are going to mark it. Please just make sure when you're done to click on the submit button. Okay, otherwise it's not going through. And then what I've done here is I've put some topics here for you. That is the topics that will be in that assessment. So if you want to prepare yourselves a little bit for the assessment, these are the topics that's going to be in there. The state of net worth, trade unions, savings and investment, source documents, and financial concepts. About the source documents, you don't have to go and complete a source document. What I've done there is I've given you like a transaction, for instance, and you just need to identify what type of source document it is. So you just have to say it's going to be a receipt or an invoice or a check counterfoil or whatever. Okay, so you don't have to complete the source document. You just have to identify which source document is going to be there regarding that specific transaction. That is the only topics. So you're not going to complete now a CRJ or a CPJ or the accounting equation or general ledger accounts. Nothing of that. Okay. So it is important. Remember, I said this assessment is going to count for marks. So it is important, people, that you need to concentrate on these topics for the assessment. And as I said, when we have worked again nicely through the journals, for instance, then I will give you assessment again on the journals. Okay. Right. Any questions? Okay, somebody's asking when will we mark it? You are supposed to do it tomorrow, that is the 28th. So I'm just giving you in advance so you have enough time to go through the topics. So that means on Wednesday we are going to mark it. So you need to do it tomorrow. Okay, you cannot be late with it. You need to do it tomorrow and then on Wednesday, because you know we're quite early on a Wednesday or in the mornings. So Wednesday morning we are going to mark it. Right, doesn't look like there's any further questions. People, that will then be it for today. So I hope you're all going to have a very nice day and then we will chat tomorrow again. All right, okay guys, goodbye.